Your market news now. Global stocks fell as caution reigned ahead of an expected U.S. Federal Reserve interest rate rise later in the day. That may see rates go up to their highest since the global financial crisis. The benchmark rate is expected to be lifted to a range between 5.25% and 5.5%, roughly the highest level since the approach to the 2007-2008 financial crisis and recession. Locally, the JSE is weaker with the top 40 down 0.25%. Retailers had gained 0.6%, followed by the precious metals groups that is up 0.5%. Industrials are lower by 1.5%, followed by the resources alongside the food producers, which are down 0.4%, and industrials also lower by 0.1%. To give us more perspective on the markets, we are joined by Han Ten, who is from Xfinity. Han, thank you so much for your time. Your sense of global market sentiment ahead of that all-important Fed meeting?
Yeah, so markets are now on the hunt for confirmation or perhaps vindication even, right? Because we know there have been plenty of expectations that the Fed and other major central banks, including the ECB, they are very close to ending this rate hike cycle. So now the question is exactly when, right? So will peak US rates be hit this week, or perhaps we'll have to wait until September or later this year? So I think that's the most critical question facing markets right now ahead of the Fed meeting today. And this uncertainty, has translated into prices both in currency markets or even gold or stocks that have been little moved in recent session.
So with markets expecting 25 basis points, what will you be listening out for when Fed Chair Jerome Powell takes the podium? Yeah,
indeed. So we'll be looking out for any clues about that question that I mentioned earlier, right? Like when exactly the Fed will end its rate hike. Now, of course, we don't expect Chair Powell to be so obvious with his answers, but instead it can be interpreted from how he interprets the recent lower than expected inflation. Does he see that as an anomaly, or does he see that as success in the Fed achieving its goals? Or even the projections that the Fed actually sends out and how Fed Chair Powell actually interprets those data. So I think the clues will be will have to be read between the lines, so to speak, from his press conference later today.
How are you thinking about rate cuts in 2024, and when are you expecting the first rate cut?
Yeah, so we are guided by markets, and our markets right now are predicting about a 90+% chance of that first rate cut to happen by June of 2024. I think having said that, between now and then, there's bound to be more twists and turns. For example, will we see China's deflation risk actually feed out into the global economy, or do we see a comeback in inflation, right, with oil prices rising again once more? So I think between now and then, the Fed and the markets will be very data dependent, watching out for information not just on the inflation front, but on the jobs front as well.
We still have U.S. earnings season, which is underway. Have there been any surprises for you in terms of the kind of results we've received so far, whether positive or negative?
Yeah, in short, nothing massive, no major surprises right now. Even if you look at the onset of this earnings season with Goldman Sachs, they had already guided even before the earnings were released for some sluggish numbers, and that was the case. Even to the upside, it is performing along the long-term average. Look, markets coming into this earnings season new to brace for some downcast earnings, and we did get that. Now it's about the guidance moving forward for the rest of the year, and ultimately whether or not customers and US consumers will have resilient earnings power to shore up earnings over the course of 2023 going into 2024.
The term AI has been probably the talk of the town, especially on Wall Street. What does justifying valuations mean for big tech at this point?
Yeah, very little at this point in time in terms of hard numbers, right? Because a lot of the AI mania is driven by this hope that AI would indeed be not just this life changer, but also a massive earnings booster. So, markets are adopting that longer term approach. Now, to be fair, NVIDIA at their last quarter's earnings announcement did stoke that euphoria by citing some massive numbers, right? So that trend has to continue, i.e. these tech companies have to actually point to some real earnings catalysts out of AI in order to justify these valuations. But at the end of the day, there's still a lot of mania and hope and expectations at play right now.
Han, let's leave it there. Thank you so much for your time. That is Han Tan, who's the Chief Market Analyst at Xfinity.